Hi, we're back again. 1 year after, we're back with next big idea at Web Summit, and I'm with Stephan Morais, managing general partner of Indico Capital Partners. We were here a year ago,
Yep.
and we were talking about this year and thinking like it's going to be a rough year for companies. It's going to be a rough year for startups that
Investment.
are looking for capital. Uh, 1 year on, what's your take on that? How was?
Well, we were right. It was a tough year. We were right. I think it was quite predictable that with the downturn in the capital markets, with one war and now two wars, and with the rise in interest rates, it would be always hard to sort of keep up the levels of investment we had seen in 2021. But having said that, if you take out 21 and partially 22, we are sort of back on track to 18, 19 and following that
Okay.
uptrend. So I think that we should stop comparing ourselves to those crazy years of 21 and partially 22 because these were abnormal years in a bit of a bubble scenario globally, not so much in Portugal, but globally. So I think that we are ready for next year. The vast majority of funds have reset their valuations. The portfolio companies that have a good product, there is capital available.
Okay.
There's lots of dry powder in the market. So it's not like there's no capital, but certainly investors are a little bit more demanding in terms of wanting to see a path towards positive unit economics, customer product adoption, product market fit, which is what it should always be, and was forgotten by some investors momentarily.
So, what's the impact of programs like Portugal Tech and similar initiatives?
It is absolutely fundamental because the truth is, as I usually say, it's not like Europe has no good engineering or science. We are just as good as anywhere else in the world in terms of capacity to produce startups. The big difference between Europe and the United States, and in this case between Portugal and other more developed markets, is that there's not enough capital for the funds. And I think a lot of times people forget that you might have lots of startups, but they will not grow without capital.
Yeah.
So it's a symbiotic relationship. You have to sort of nurture the startups and you have to nurture the funds. And unfortunately, for a good number of reasons, and because the venture capital asset class is fairly young at an European level and super young at the Portuguese level, it's an unknown quantity for investors, for private investors. And so if there are no programs like the one done by the EIF and the BPF and other types of institutions like that that are state related, there is no market. But having said that, it is also very important that governments and the state and these institutions come up with policies to incentivize private capital to come in. Because you cannot do programs only with 100% state capital. So that's not the way, for example, Portugal Tech, you always need a big portion of private capital as well. So you need those matching funds, and you need to create a set of incentives so that the private sector, the family offices, the institutional investors, even social security in Portugal and pension funds and insurance companies and so on, that they have an incentive to actually come into this asset class that they don't know and that they fear for risk and for liquidity reasons. So I think that it is absolutely fundamental to do Portugal Tech 2 and other initiatives, because that's like the backbone of the system currently, particularly in times of crisis. But it is absolutely fundamental to do, to produce policy to incentivize the private sector to match those public funds.
It's still a challenge that you are talking about policy to keep up with the needs of the market, so startups and funds can actually be focused in doing what they have to do. It's still a problem.
It's a big problem. And I hear a lot of times people saying, well, but if the results are so good as you say, and if it's so promising, you don't need incentives. But that's unfortunately not true. I mean, I think that in a perfect market situation, as economists define it, that would be true. The market would solve it. But the problem is that the market needs several pieces, and one of them is knowledge. And a lot of the actors, the owners of capital or the managers of that kind of capital don't know the asset class, so they don't have the knowledge to decide. And then there's also lots of disincentives. There's lots of laws and regulations that actually prevent these actors from investing in our asset class, um, supposedly to protect their investments, but effectively they're kind of overprotecting their investments, and it's detrimental to the market. And we have to decide in Europe whether we want to compete at the global level or not. So we cannot say that we will compete with Asia and the US in producing high quality, groundbreaking global category winners in terms of startups and unicorns, and then have no money to do it. It's just
Yeah.
not possible.
And talking about regulation, I was seeing your take on the stock option law. So Portugal is changing a lot of rules regarding startups, and actually, you said it shouldn't be just for startups; it should be for companies as a whole. So, can you explain your take on that? Like,
Yes,
what needs to change to make it
more
a better
effective.
space? Yeah, yeah.
So I think that number one, the introduction of the startup law was extremely positive. I think it was extremely positive that the government, particularly together with Startup Portugal and other actors in the ecosystem, put together a base legislation that actually enables sort of a startup to be legally defined and having lots of benefits, let's put it this way, that are applied to this category of companies. Now, we all know that there's always things that can be improved, and in the case of stock options, there are a few rules which are a little bit restrictive and that partially defeat the purpose. But I think that's being worked on, and I think that there's now a strong base to improve on what was done. For example, not excluding founders, not excluding board members, and ultimately, stock options are an incentive program that I think should be for all companies because that's how developed economies work. There's stock options for all sorts of employees in big, small, and or other types of companies. And as long as it's applied properly and accounted for properly in terms of accounting, it's a positive incentive for all. But by all means, let's start with startups because that's for them it's absolutely crucial way of attracting talent and retaining that talent for the long term because stock options work has a long term incentive for people to stay
Yeah.
and create value for the company.
We're always talking about like innovation and entrepreneurship, like the pace is really really fast, but then when you look to regulation, the pace is slower. And with Web Summit this year, we're all talking about AI and the impact of AI and regulation on AI. I wanted to pick your mind a little bit about this, the speed of things. It's different when you have to regulate and then when you have to innovate. How do we get people on the same page?
Well, first of all, I think that difference in speed is important. You wouldn't want to regulate as fast as the market innovates anyway, right?
Yeah.
Because you need sort of a counterbalance. Things happen very fast in the market and then they have to be thought over. Of course, if it's too slow, then the market evolves so fast that bad things can happen
Yeah.
or unexpected consequences can happen. But I think that there is more and more conscious at an European level that yes, regulation is important, but it is also important to enable innovation, enable new avenues of efficiency. But it's a very, very hard balance. And I think Europe is seen as the leading bloc in terms of protecting consumers, protecting free speech, and many other things that are absolutely fundamental for democracy and for things to work out well. But we definitely must be careful with not stifling innovation and killing startups and being able to compete. So it's extremely difficult balance. I think from what I see at European level at least, there's goodwill and there's an intention to do well, and Europe leads and is seen as an example by the world. Difficult balance, not an easy solution.
So let's talk about 2024. What are the trends? What are you looking at?
So I think obviously Indico, we've been extremely active this year. It's been one of the years since we were founded, since we launched the first fund in late 2018 where we invested more, and it's not by chance. We invested a lot, for example, in 2019 because we could see the run up to a little bubble. And so we slowed down in 2021, 2022 significantly because we thought, the market was not conducive to us doing primary investments. It was very good for others to do investments in our companies, which happened quite a lot, and they raised a lot of money at very high valuations. And we are again in a situation that I believe that 23 and 24 will be excellent vintage years in terms of investing. So we will do, I think, more than 10 investments this year, particularly with our Blue Fund in climate tech companies related to the oceans in very diverse and deep tech areas. In 2024, we will also have new funds dedicated to software as a service, deep tech, space tech, and other areas which are not ocean related but still related to sustainability. And I anticipate that it will be a very good year to invest for sure. I also think that there will be continue to be a bit of a shakeout in terms of companies not making it. So companies that were not really being able to demonstrate that they have a solution for a problem and people are paying for it, and it makes sense. I think they will run out of capital, the ones that have not been able to raise, and I think a lot of funds will disappear globally because a lot of funds, particularly newer funds that started investing in 2021 and 2022 and invested in massive amounts of companies at very high valuations, they really don't have the track record, and even older funds, of course, to show that they should get further capital and confidence from their existing and new investors. So I think the number of funds will continue to drop, the number of startups will drop as well, but the very good projects will get capital at valuations that will be near time record anyway.
Stefan, thank you so much. I hope I'll see you next year here again
I
at
hope
Web
so.
Summit and we get the chance to talk about 2024 and how it was.
Thank
Thank
you.
you so much.
Good to see you.
So keep with us at LinkedIn of Next Big Idea. Click follow and we'll notify you every time we start a new conversation. Thanks.